One of the most important questions that you can ask yourself as an investor or somebody who's about to begin to invest money is, what type of investment strategy do you want to follow along your investment journey? In this video, I'm going to share with you the three most common investment strategies that you can use right now, including fundamental analysis, technical analysis, and sentiment analysis. You will learn the pros and cons of each strategy, as well as some of the most important resources that you can use in order to become a successful investor in either one of these strategies. Okay, so the information that is going to be presented to you in this video is based on this article, which is going to be linked in the description. And the reason why is because we conducted a lot of in-depth research in order to provide you with the best resources and the best way to think about each of these different types of stock analysis. So what I'm going to do now is I'm going to briefly walk you through what is stock analysis, and then we're going to talk about the different types of stock analysis strategies that you can implement. And most importantly, we're going to then dive deep into the pros, the cons of each of these methods. So you will see some of this information right here. And then later on, what I want to do is share with you some information that is not included in the article. And this will include some of the resources that I recommend for you to become a really proficient analyst for each of the different analysis types, as well as different tools that you can use to take this type of analysis to the next level. Okay, so starting off at a high level, we have the three main different types of stock analysis. So we have fundamental analysis, technical analysis, and sentimental analysis. I really like the description that is provided here for fundamental analysis, and this is basically that you're trying to look at a company's fingerprints. You're basically examining what makes a company unique. You're looking at its health through the lenses of the financial statements, the state of the management and the company affairs, as well as the industry, the market, and the competition. All these different factors allow you to look at the company through different lenses, and altogether what this allows you to do, and the goal of fundamental analysis, is decide whether or not a particular company is undervalued, overvalued, or fairly valued. If the company is undervalued, then this is the opportunity for you to buy. If it's overvalued, then you shouldn't invest in that particular company, or you should sell if you're already holding that company. And if it's fairly valued, you can decide whether or not you want to hold it or you want to sell it or buy it. The other type of analysis, again, just a brief overview, is technical analysis, and this is like studying CCTV footage. You're basically looking at charts and different price data. So for example, here you have a chart that includes the volume and the price, as well as the open, the close of this particular index in this case, which is the S&P 500. And based on these patterns, you're trying to predict where the price is going to go next. After that, we have sentimental analysis. And I like this, how it says this. This is like reading a company's diary. So you're really looking at how people are feeling about a particular company. Believe it or not, the way that people feel about a particular company can have a really strong impact, especially on the short-term price of a particular stock. So let's dive a little bit deeper now into the different types of analysis. So here we have fundamental analysis, and I've already discussed the main overview of it. So for fundamental analysis, one of the tools that I recommend that you use is Y-sheets, but most importantly, what you need to do regardless of the tool that you use is to do the following things. So the first thing that is really important is to understand the current state of affairs of the company, and there's different ways that you can go about this. However, for the financial part, which is absolutely critical for fundamental analysis, what I recommend is that you set up a model that you feel comfortable with. So in this case, you can see this model on Excel. It's very cool because it provides you a whole bunch of information and important numbers and metrics that you can analyze, including the stock price chart. It also includes some risk measures and whatnot. So this is a really good way to get quick understanding of how well a particular company is doing. And the cool thing is that once you set up a template, and you're using the right tool, you can do something like this. Change the company ticker, and then what you'll see is that all of the data will automatically update for you. And in this case, the way that works is that it's using Y-Sheets formulas in order to be able to achieve this, as well as the wise price function to be able to retrieve some of this other information. So this allows you to get a quick overview of a particular company. The other thing that is absolutely critical, and again, before I go into that, actually, I want to say that you can customize a model like this to suit your particular needs and to look at a company in the way that you like. Now, moving on, the other model that is really important is to use a valuation model. So there's different types of valuation models. We've talked about them in our channel in many different videos. One of the most common ones is to use a DCF. So in this case, you can see a fairly simple DCF model that you can apply. And again, the cool thing is that you can simply change the company ticker, the data will update, and then you can just simply go ahead and change the assumptions. And this will tell you the actual value of a particular company. So in this case, you can see how we have base case, conservative case, and optimistic case. And in this case, you see the values that you get right here. Here, there's different parts of the DCF valuation, and here we get the share price as well. So this is really important to be able to determine if a particular company is undervalued, overvalued, or fairly valued. The last thing that's also a very important tool, and there's many of them out there that you can use. I recommend that you use the Y-Sheets one because it allows you to get all the data automatically into Excel. But it is basically to use a screener. A screener is going to allow you to narrow the stocks that you're analyzing and only look for those that have potential. So in this case, let's say that we're looking to invest in companies that have a market cap less than 100 billion. So in this case, we have 100 billion right here. We're looking for companies that have price, let's say, less than $20 per share. You can select a sector like industrials, but you can also go into some of the other sectors as well. And then we want companies that are actively trading. Once you have this, you can click on get data. And the cool thing about this is that this will automatically provide stock lists for you. So that way you can start to narrow down the companies that you want to look at in the first place. So in this case, we get a fairly big list because of the criteria that we enter, but obviously if you change the criteria, then you're gonna get a different list. The cool thing about this is that you can start to filter stuff by, for example, in this case, show me the companies that have the market cap, the highest market cap, the lowest market cap. You can filter by industry as well, because we looked at sector, so that's industrials. There's different industries within the industrial sector as well. So let's say we wanna focus on aerospace and defense. So there you go. You get a whole bunch of stocks from different exchanges as well, which is pretty helpful. And then you get a whole bunch of other information. You can always add onto this information using Y-Sheets. We have many videos on that that you can check out. But now the next type of analysis that we're going to focus on is technical analysis. Actually, before we get into the technical analysis, I want to share with you quickly the pros and cons for this type of analysis. So the pros include the ability to evaluate a company's long-term potential and identify undervalued stocks. So this is really powerful because if you're able to do this, then you can be very effective time after time. This also allows you to have a comprehensive understanding of a company's financial health and future prospects. In this case, also identify companies that have a sustainable competitive advantage and allows you to make informed investment decisions based on a company's performance rather than the market sentiment. The cons is that this can be time consuming, requiring a significant amount of time in research and analysis. This method may not always provide insights as to why a particular company is suffering from such high price increase or price decrease depending on what is happening. And then some financial metrics, they're harder to interpret than others. It's really up to the interpreter to make meaning and sense out of all the data that's presented to them. The other thing is that there might be some unforeseen events that happen which completely change the fundamentals of the company, and and therefore the value of the company. So you have to be very aware of that. This is basically the same point. Some resources that are really valuable and I've recommended in the past is first to get this book, Security Analysis. Other book which is also highly recommended is to get The Intelligent Investor. And the reason why is because both of these books are written by Benjamin Graham, who is basically the godfather of value investing and the original mentor for Warren Buffett. So there's a lot of really powerful information included in these books that you can check out. The other thing is there's this course actually on Udemy which is quite helpful. I've taken it in the past and I recommend it. I have no affiliation with them. So if you find this valuable, you can go ahead and enroll in this course, which provides you with a graphic representation and practical examples of different concepts like fundamentals, like being able to perform company valuations, company research, etc. The next type of stock analysis is technical analysis, and this is something that you see a lot. Now, I'm not an expert on technical analysis. However, I have taken different courses on the subject just to be informed. But what I can tell you is that one of the best tools that you can use out there is TradingView. And again, we have no affiliation with TradingView whatsoever. So if you find this video valuable, you can go ahead, create a TradingView account and start to do your analysis here. But this is really good because I have actually a lot of friends that focus on technical analysis. And as you can see, their charting software is amazing. It really provides you with a lot of flexibility and it allows you to see data very, very easily and to be able to identify the patterns that you need to in order to make good investment decisions. So you can see an overview of their software here. So for example, let's say I've identified this pattern, right? So now I can start charting here. I can start writing comments on this graph. Really, there's a lot of different things that are really powerful that you can use with the TradingView software. There's also market sentiment stuff that we're going to talk about a little bit later. Overall, TradingView is such a powerful tool if you want to do technical analysis. It's one of the best tools that I have seen out there for this. The other thing that I actually really like about TradingView too is that they have a screener, and this screener I would particularly use it if I was looking to do technical analysis. And the reason why is because you can create filters that are more technical based. So in this case, we're looking at the beta, we're looking at the volatility. You can look at so many different factors here and then you can filter, right? So I can be like year-to-date performance, show me the companies that have the highest performance year-to-date. So here we go. Now we see that this is the company. We can click on it and then right away we can get into a chart for this company. So now we can start to look at different patterns and to see what is going on with this company. In this case, I don't know what this company does. It looks like it's some type of pharmaceutical, but this might be a fairly new company listed in the market. I don't know. But you can see how there was a massive jump in terms of the stock price. So you can start to go ahead and analyze these patterns to see, is this something that's likely to continue or is this something that will continue to decrease over time? The other thing that I like actually is that there's this indicator section, and in this case you can look at many different ratios that you can also use so that you can be a lot more sure of the decisions and the conclusions that you come up with. Overall, the pros of technical analysis include the ability to identify short-term trading opportunities, which a lot of people are attracted to. It also provides you insights into market sentiment and investor behavior. So they're somewhat correlated as well. So you also get that other types of stock analysis strategy into it. The other thing is that it can be useful to identify patterns and trends in the stock historical price data, and not just stock price data, but it can also be used for indexes as well. You can also use it in conjunction with other forms of analysis to make more informed investment decisions. So if you identified the value of Apple, for example, you can also apply technical analysis to decide whether or not you're entering the stock at a good price as well. Now, the cons is that it may not provide a complete picture of a company's long-term potential or its underlying fundamentals. Remember, at the end of the day, a company is an actual business. And if you're looking just at patterns of the stock price, that doesn't really tell you much about the company itself. So that is one of the downsides. And then other downside is that a lot of traders rely too much on technical analysis and ignore many of the important fundamental factors that drive the stock price over the long term. For long-term investors, yeah, this is definitely not the best strategy for you. And then the other thing is that it's going to take some time and experience to be able to identify identify and interpret charts correctly, make sense of that information, and make a good investment decision. Now, in terms of resources, you already saw TradingView is a great one, but in terms of actual resources that you can check out to learn, so first we have this book, which is highly rated in Amazon, and a lot of people talk about it actually. So this is a good book that you can check out on the subject. And the other thing that I recommend actually is to check out the trading channel. They have a lot of good information, and in this case this video is really good. They walk you through the different strategies that they use continuously to be able to profit from technical analysis in the stock market. The last type of stock analysis is sentimental analysis, and there's no one tool per se that I recommend that you use, although if you know a really good tool, just make sure to leave it in the comments so I can have a look at it. But what I recommend is to use multiple tools. So one of the tools that I like is called Finviz, and here what you could do is type a company ticker or a company name. So in this case we're going to be looking at Apple, and there's a whole bunch of information that you can access right away, which is pretty helpful. But what I like for sentimental analysis actually is two things. First, I really like the fact that there's a news feed that you can check out right here. So in this case you get taken to a whole bunch of relevant articles about Apple, and you can check them out and include this into your sentiment analysis. The other thing that you can also do is to look at some of the sentiment analysis against what other investors are doing, which is quite helpful as well. But then the classic method of sentiment analysis is to go ahead, type in the company ticker on Twitter starting with a $, and right away this will take you to the Twitter feed, which will provide you with news as well as just companies or people's sentiment for this particular ticker or company. So in this case you will see some different commentary, and again this is information that you can go ahead and use in your investment decisions. So the pros of this type of analysis is that it provides insight into market sentiment and investor behavior. You can use this in conjunction with other forms of analysis like technical analysis and even fundamental analysis to be able to form good investment decisions. This can also provide an early warning system in order to see whether or not the assumptions that you had made about the company are still relevant today, because the reality is that the way and the future of companies is always hanging in the balance of what they're doing today and what is happening in the market. So this is helpful to keep in mind. And then you can also identify companies that are receiving a lot of positive press and analyst coverage, which in many cases leads to an increase in the stock price. The cons is similar to technical analysis. It may not provide a complete picture of a company's long-term potential on the underlying fundamentals that often drive the stock price over the long term. Again, some investors may rely too heavily on this and lose money, and it may not take into account unforeseen events that can impact a company's performance. You might have thought that maybe the sentiment was great just the day before, so you bought in thinking that it was going to keep going, but next thing you know something happened, like the CEO had some sort of scandal or anything like that, and right away the stock price is going to tank. So these are the things that you need to keep in mind. So in terms of resources, I recommend that you check both of these resources out. So here we have a guide on sentiment analysis, which is pretty helpful, and this guide can also help you set up your own sentiment analysis system. So I recommend that you check it out. And then the other resource that you should check out is the Sentiment Traders. So we have no affiliation with these guys whatsoever, but they provide you with sentiment analysis on different companies that you can go ahead and use to make good investment decisions. And I believe the analysis has been very high quality for what I've been told. I haven't personally used it, so be careful with that. But overall, those are the tools and the resources that I would recommend for this type of analysis. Now you know all the most important stuff that you can know about the different types of stock analysis, including technical analysis, fundamental analysis, and sentiment analysis. So go ahead, use this information to make good investment decisions for yourself and for those people that you most care about. If you've enjoyed this video, make sure to subscribe and turn on the notifications on, so that way you get notified every time we release a new video like this that's gonna allow you to take your investing game to the next level. I'll see you in the next one.